Over and over in a DeLorean.
What's up, everybody? Bueller Gang. Wanted to go over a stop loss video. Been getting a lot of just kind of vague questions on how to use or not really necessarily how to use stop losses. They ask me how do I use my stop losses, and I always show them the same thing. You know, I use my levels. I use what I have in front of me, but I also wanted to give you guys a different view from that. So I'll give you both views of that, and then we'll cover a couple things, and then hopefully you guys have other questions. Hopefully I answer a lot of them in this video. But hopefully you enjoy it. Drop a comment if you guys have anything else you'd like to add, or if there's any other advice you'd like to give people who are also asking about stop losses. So I'm going to cover two separate things, but I have two things to ask you guys. When you guys go for your stop losses, are you even thinking about what kind of trade that you're in? Are you thinking about what your like self-awareness, you know, and then at the same time what size you're in, you know, because a person who let's say scenario one, there's a person who's used to trading $1,000 in each trade, right? But let's say in this particular trade they only put 200, so they're using a fifth less size of their account. Can they loosen their stop loss, or do they need to keep it where it normally needs to be and just kind of stick to the same rules? Now, the mature answer is yes, keep it at the same rules. You want to still kind of stick to the percentage game, but at the same time, you have to also understand the equity amount. If he's using a fifth less, if he's using only a fifth of his normal amount of money, right, then he should also be allowed to set a more loose stop loss. But don't just make stuff up at the same time, too. And I thought this chart made a really good, awesome breakdown of that. Again, you guys saw here, we had this high of day. We had a breakdown. They slowed down here. They ended up going into the control point. They rejected. I got in. What happened afterwards, though? They ended up pushing it. So scenario one, right? Scenario one. Let's say first person. I was going to type something, but I'm not going to. First person using a heavy amount, right? So they're going to probably keep a very tight stop. They're probably going to end up cutting this as soon as it's crossing the 90 EMA or the control point. They're not even going to wait for the golden pocket, right? Let's say someone who uses half size. They're probably not going to be wanting to let a trade go past the golden pocket. Now, in my example, I was using literally one contract, so it was really just kind of something super light. It wasn't going to hurt me at all. Even if I lost 100%, it wouldn't have been that bad of an L for me. So I'm able to set a more loose stop loss. What is the maximum stop loss I could possibly set in this? Now, in that video, I talked about this being my stop loss, this loose area. Since I had already kind of set this area, didn't like it, set this area, it didn't really screw my position enough to where I was like, oh, I got to cut this now, you know, but I wanted to give it a chance without making anything up. The last chance stop loss I have is basically the high of day supply, the high of day. So if it had pushed through scenario 3, you'd definitely be cutting that, because it doesn't matter what size of your account or what size you're used to trading, you're cutting that because a new high of day implicates that there's possibly going to be more continuation, and they're going to completely ruin your position, right? So then you're out of it, right? So that's something you need to ask yourself is, and we'll type it here together. What type of entry did I take for this play? And how much risk is on the table? Because again, let's say you're taking an open range breakout. You're looking for a breakout above this level. You're entering. Awesome. You're in. Candle close. You're in. Price keeps going up, but then it fakes out. You know, where's your stop loss? Is it breaking the 90 EMA? Is it under your entry point? Is it after the breakout spot? You know, there's a few different answers there. The correct answer is where you entered or after the break of the 90 EMA on whatever time frame you're trading on. You would not wait for this, because by the time it got to here, it's completely ruining your position. You're probably down 30, 40, 50% by that time. So you're not going to make it that far, right? But someone who has, let's say, a lot less capital at risk here, let's say they do enter the 40% here. You know, you got to be in the mindset of like, all right, this is an open range breakout. This either continues higher or I'm out. That's it. That's all you can think about. Now let's think about an 80% scenario. Let's say price is up. Someone sees that it broke out their level. Awesome. That's what they were planning for. They do their fib, or they see that it comes back all the way down here. Awesome. They see it's building up a little bit. They get in. They're in right there, right? Where should their stop loss be? Basically at this level of support, because you're not just entering off something as risky as your open range breakout. So if it breaks that, you're out of the position. You're not liking it, right? Targeting that high of day or whatever other level you have in the area. So it's also what type of entry do I have, you know? So think about that when you're going into plays. And am I entering something that's aggressive? Am I entering a little bit more passively? That's something to kind of take into account. And then secondly, how much is on the table? How much am I putting on the table at risk here? Is this a normal amount that I'm used to putting at risk? Is this an extra amount? Is this a light amount compared? So that also kind of adds on to it too. And I feel like that example kind of answers that question. So hopefully these help you out with that as well. But now I want to go over some stop losses with levels. So let's go over that. All right, so now that we have our levels in front of us, let's try to think about it in a different perspective. So let's think about it like this. Buy at support. Whoops. Sell at resistance, right? So we got buyers at support. We have sellers at resistance. That makes sense to us, right? So let's say this is our resistance. Let's color it red so we all understand it's resistance, right? And let's say we have a support. Let's color it green so we all understand we have a support here that are buyers, right? Bullish, bearish, right? So and I'm just speaking in vague terms, again, just trying to break this down as much as I possibly can. So let's say I see prices is down this night, in pre-market it sells off and then it kind of sits here at open. Who's more at risk here, buyers or sellers? Sellers, because there isn't anything saying it has to break this support, right? We know there's a support there, right? So higher probability is that buyers are taking this and you can keep a stop loss at this level, right? That's how you should think about things. The same thing happens when we have the opposite scenario occur. Let's say we get, a downward market and then in pre-market it pops up and we're starting flat right at open against resistance. What are you looking for? You're looking to grab puts or short positions with the stop loss right at that level or right above that level, right in that general vicinity, because this is the point of control. If it goes past this, you don't know, what's going to happen. You know that it's a breakout to the upside. You don't know who has control because they haven't came down and retested it to show that it's controlled by bulls, because that could easily fail, right? So until you see this kind of move, then oh, okay, this is bullish related. So until that is validated that it's bulls, you don't know that, right? So that's why it's smart to think about it in this sense as well. But I wanted to draw that picture because I feel like that'll help out a lot of you guys with moving forward. And then as well as like when we're already in the range, let's say we're already here and you end up making a lower high right here. People are always like, well, what should my stop loss be? You're not going to have an exact sense where your stop loss is. You're going to be looking between where this high is and that level, because you know that if it passes that, you have a potential breakout, right? And then you have to get out of that play. But if this is your entry because you like this for a potential lower high to go back towards that support that we've been trading inside this range all day, then that's an awesome plan. Again, you got a good first target because you don't know it's not going to make a new low. So take some profits here, leave runners to go further down. Keep your stop loss up there. When runners start to pick up and you're already down here, you can move your stop loss down to down here. Therefore, if it does go back up, you should never see your position go red or hurt you after it's already moved lower. But hopefully this will help you guys out with a little bit more of how to read levels. Let's look at the chart now, though. So using that kind of style of thinking, what is something based on like the trade I took today? I basically entered this candle. Where did I average down? Let's look real quick. This candle. Average down that candle. And then we sold this candle. I just had to triple check. We'll just highlight this right here so we can see it. So entry. Why do I enter there? Because I know there's a resistance up here. If I get a pop move up to this and we cross above it, I'm out. So I enter super, super light here. So what did I do in this scenario then? I know that I'm entering against a resistance, selling at resistance, and I'm entering light because I want to be able to have a loose stop loss because I see that there is room above us. So I'm also having chart awareness, positional awareness. I see what's around me. I know how much room is on each side. I know that if this pops to the upside and cracks above that and closes, I have to potentially exit that play. If it gets up here and rejects, I could potentially average it down, look for a move to come back down here, get out of that position. We didn't end up getting that. So that was the game plan for today, kind of just keeping that stop in mind. But again, kind of applying these similar rules every single time I look at this stuff. So it doesn't matter what levels I have in the area. It just, again, depends on what levels are around me. Where is the price on the chart, and what am I looking for? What is my awareness? How much am I entering on the play, and what kind of entry am I going for? Again, am I at resistance? Am I at support? Where are we at? So we ended up averaging down here, right? Now, this is more or less just to save the position because as we're breaking down lower, the position's actually down like 40-50% right here. I think it was actually down like 60-61% here, and then I think when I averaged down, it was like 40-44%. And then by the time it started flushing within the next few minutes, it was already going back up and helping out. So, but if we had not done that, we would not have made profits as quick. So ignore the average down. That's a whole nother topic. But the reason why I'm saying this is because imagine if I did not average down here. My stop loss that's way up here is now honestly feeling like it's like right here, because if it was to go back up here, well, by that time my position is down 100%, whereas around this time it's only down 20-30% because it hasn't been that much time gone by. But because more time has gone by and then we end up getting the dip and then we end up getting the pop, by that time I'd be down 100%. That position's unsalvageable. Even if it did come back up here and reject and come down here and make a new low, I'd probably still be in the red until it actually gets even lower down here where I'm actually seeing an in the money position. So kind of think about that too. But apply these questions, apply some of these little rules and ways of thinking about things when you're looking at your levels or you're looking at whatever kind of entry you're looking at, and apply this when you're trying to think about your stop loss. Maybe you're in an on the fly position that you weren't necessarily planning beforehand, or maybe it's something you did have planned and you were just going for it. Awesome. Either way, stick to this. Don't try to step away too much from, the things that make sense. You should never enter and go, well, I don't know where my stop loss is. Well, then you shouldn't be in that trade. So it's also about that kind of mindset. But I hope this video helps you guys, again, kind of getting into the mindset of where should my stop loss be and just how to think about your stop loss. I feel like people don't talk about these kind of questions too much. It's always just like, oh, just set it here or set it at 15%. It's like, yeah, that all works and stuff. That makes sense. But what's going through your head? What's your thought process? What are you thinking about? And it's not fair to ever say just one answer and say set it at 15%, because every situation's different. What if I'm entering a 40% or an 80% and someone else is entering a buy the dip or a lead test? What if I'm entering less than I'm used to risking? Or what if I'm using the same amount or even more than what I'm risking? Should I think differently about it? And then also positioning of the chart. Where are we on the chart? How much room do I have above? How much room do I have below? So also applying your levels. I feel like people don't think about these kinds of things when they're going through where should their stop loss be. So hopefully this video helps open up your mind a little bit. Hopefully it helps you kind of develop better stop losses or better risk reward thinking for you. But again, feel free to drop a like on this video, drop a comment. I hope this helps you out for real. And if you guys have any other video topics you guys want me to go over or any other kind of things you want me to go over, feel free to hit me up and I will get on them. But hope you enjoy.